Bad start to the worst month of the year, but ultimately what we saw was a pretty clear break of the range. Looking at where we've been over the last 20 days, we've seen the stock market continue to try and hold on, but it broke today. So what else can we do? This is the point of having technical analysis. I've had the yellow light on stocks because of that range with pretty clear definition, and we ended near the highs of the range on Friday, but we didn't break out of it to the upside. And so when you flip back around and not just test the low end of the range, but then break it, what else am I doing here if I don't flip the light red? You have a base, a technical pattern, a range, and then it breaks. That means bears have overwhelmed. It might be a short-term thing. I know the light's been flipping back and forth now a lot over the last couple months because it's been a pretty wild ride. Now, it makes sense also that you would see probably some nervousness going into an employment print when that was the data point that caused the VIX 65 just a month ago. Probably makes sense that your VIX is elevated going into it. So maybe that's one way to view it, is just the market kind of normalizing, realizing that, okay, there are pretty high stakes here when we are possibly at the very late end of the cycle, which is what the yield curve, the Fed cuts, the Somm rule, all that stuff tells us. But the market's been pricing this as like an early cycle or mid-cycle refresh. And that's where the entire narrative here hasn't added up. But firstly, what's most important is just the AI stuff. Bears came for the jugular today, which is NVDA, and they hit it. Now, does that mean it's completely dead? Of course not. This is a company that's doing incredible stuff. But price action is price action, and valuations fluctuate for a reason because the market has varying degrees of tolerance for them at other times. And so the chart of the NASDAQ, which is looking like the chart of NVIDIA, but even kind of worse. Remember, NVIDIA tried to make another push back to the highs in the mid to late summer. Didn't happen. The NASDAQ just has been weak generally. And so now you've got pretty clear downtrending action in just the past month for the NASDAQ. So that's number one. By the way, the high there, July 10th, that's when originally I took the green light off stocks back when the rotation trade first started, and that whole thesis still holds. I begrudgingly flipped the light green again because it looked like Powell's just ready to slash, and the market did have a good general response to the Fed chair's dovishness at the end of last month. But now it seems like we're being reminded going into employment that you don't want any scenario in which they have to cut 50. Notice the way bonds are rallying, and pretty sizably today too. Last week we had some selling in bonds, and that's what I think you want to root for. But at this point, it's looking like it might be too little too late. Whatever the Fed's going to do, it seems like the general momentum of all the late cycle indicators we should just assume is going to hold up to their historical indications, which is the end of the cycle. Yield curve on inversion. Somm rule, unemployment getting triggered. I mean, these are the types of things here that the market has totally ignored in favor of repricing for like an early cycle Russell, small cap, rate sensitive. Okay, the market's been all over the place and it hasn't made sense. So now basically the only things we're left with that are working are staples, defensive, like pure defensive trades, anti-beta stuff. It definitely seems like it has a role in the portfolio, but that's not market leadership. Last week I talked about how a rational bull market will probably be a slower one, and I think there's probably some credence to the notion that this is a pretty rational what's happening, repricing some of this stuff. But we have the S&P in a clear range for 2 weeks, then breaks to the downside. That means bearish momentum is overwhelming. So what else can we do but flip the light from yellow to red? I'm looking for bonds, maybe to go green, as we saw that chart of the 10-year. If that thing breaks lower, then we're going to have a big event. Hopefully it doesn't. Hopefully stocks can regain their footing. Hopefully this is just a delayed vacation selling from last week. Maybe people were gone when NVIDIA reported, but I can't in good conscience keep the range bound yellow when we broke the range to the downside. So bad start to the week. I'll see you tomorrow.